Hi everyone, this is Michael Ben-Ghiat. This is the Stock Picks weekend video, our weekend review for August 13th, 2022. Here's our disclaimer. You can pause and read that so you understand it. And as usual, we're going to start with just going over the current market environment, our portfolio stocks. We have 3 positions now. Oh, actually 4 positions, I'm sorry. And we'll go over some stocks in the watch and ready list, which are actually decreasing. We're just not in the greatest stock environment, which here's our latest notes from Friday. So yeah, one of the things I want to talk about, I've heard from people, and it's a very frustrating period, especially because we're seeing the indexes just blast off. You know, the NASDAQ is actually back in a bear market. It's gone up more than 20% from its lows. In a bull market. And it's frustrating because you're seeing, people are saying, oh, look at all these stocks, they're just going up and up and up. And it's all the beaten down stocks. Now, we don't buy the beaten down stocks. We're always trying to buy the leaders. And the leaders are the stocks that are making new highs or at or near new highs and are showing all the characteristics of the big leaders of the past. Now, if you're buying a beaten down stock that's in a downtrend, sure, it can come back up. But that's not, those leaders are in the past. Most of those stocks will never come back and be the true leaders that they once were. You can argue that, Amazon and Google, those days of the huge growth that they've seen over the last 20 years, they're probably not going to grow at that size because they're already trillion-dollar companies. For them to grow to $4 trillion is probably unlikely. So there's going to be new companies that are coming up that are going to start taking over from some of these, bigger past leaders. And those are the ones we're always trying to find. So our style is not to buy the beaten down stocks and bottom fish, which for the most part will just wipe out your account over time. It's almost impossible to do it because you don't know where the bottom is. So we don't do that. But again, it's a frustrating environment because we're seeing our stocks that we've been buying for the last, almost a year and a half, for the most part, it just haven't been working. And remember, we did have a stealth bear market that happened in 2021 that turned into a real bear market. And during that whole time, the indexes were holding up. On the superficial level, the indexes were driven by the mega caps and the larger tech stocks were holding up. But all those soldiers, those are the generals, the soldiers were retreating. So we got down to only 15% of stocks were above the 200-day moving average. That's like most of the market was in a downtrend. So even though while we were trying to buy the best stocks during this whole time, it's been a poor environment. So most of them would just break out and they would fail within a few days. So, and it's still where we are. We're not seeing, even though the indexes are rallying like crazy, we're just not seeing a lot of stocks setting up and breaking out. That's really what it is. So we have to continue to be patient because this approach works. It works, and it's worked for many of the best traders in the world who have made millions and millions of dollars. So we don't switch our approaches because it doesn't work for this period of time. We just continue to do it. We've been taking small positions, half positions, or being out completely because we're just not seeing that portion of the puzzle that we need to. So we're just going to continue to keep exposure light. We keep trying. So we actually have 4 positions, which is the most we've had in a long time. So, before I did that, I want to actually show you just sort of what's going on. So give me 1 second here. Let me pull up the charts. Where's my... hold on 1 second. I'm going to have to pause the video. I want to bring up something, but 1 second. Okay, so what I did, I've just brought up, I've got a few charts here of just some of the recent leading stocks that have just thrown in the towel and broke out with just huge volatility because we're seeing this a lot. You can even see here, this was a stock, here's the S&P. Look at it making new lows, going down, down, big low. This stock was doing the opposite. These are the leaders that you're always looking for, but look what happened. It just plummeted here, it tried to break out, plummeted again on earnings. Just this kind of action, sure, it happens once in a while in a stock, but it's been happening over and over. So this was one we were watching. This was one that we had on our watch list big, just this breakout and huge volatility. Doesn't look like much, but this was a 8-9% run. Then we're now bouncing off another huge move on Friday. You know, look at the volume going on. This kind of behavior is not normal. These stocks, when they break out, they should hold these breakouts, maybe pull back to the top, and then they go. This is not what's been happening for a long, long time. Here's look at another one, Altimmune. This one, I actually tried to buy this a while back. I got shaken out over here, and then look, we had a 26% move. Effectively, the peak here was over 30% in one day. But this behavior, and we're seeing up here, another one tries to break out, closes at the low. Just this is not normal action. So this is a problem. This is why it's been so difficult. Here's one that we actually owned, but we sold it right in front of earnings here because it broke out, but it didn't really go anywhere. And then, of course, we bypassed this big plunge, which was good. But this is not normal. This was a leading stock. It was making new highs while the market was coming down. Let's look at another one. Another one, just big crash down. Here's another one. Another one went down 10% on Friday. Here's one we were on our. It was on our watch list. It's broken down. We're looking for stocks to tighten up. Like here, you can see it was tight trading, but now we're getting this. We're getting the opposite. It's getting bigger. We call this a megaphone effect. And look at the volume too. So these are all things. And here's another one we had on our watch list. It was tightening up here, and then it just kind of fell off. And now same thing. We're getting the volatility is increasing, not decreasing. So we're losing a lot of stocks off of our lists because this is not what we want to see. We want to see the opposite of this. And look at the volume too. That's some big selling going on over here. So let's now move over to, so this is why we're just keeping exposure pretty minimum. So let's look at some of the ones on our buy list, our growth portfolio. So we do have Vertex. This one on earnings had a strange day. It was selling off in front of earnings, and it had a huge day up. We ended up getting in on this day, kind of a little non-conventional buy point, but it worked, and so looks good. This has really strong earnings and sales. It's acting like a leader. Look at the market coming down. This thing was just coming up. Even through this last bit where the S&P was really coming down, it was holding its own and then made a new high, and then it's continuing to make new highs. So this is Vertex Pharmaceuticals. It looks like a nice winner. You can see, look at the earnings and sales that are just starting to really ramp up, or the earnings here for the annual earnings. So that looks really good. We just bought RPRX, which is Royalty Pharma. They own pharmaceutical royalties, and they invest in other companies. And again, this one's, we just bought it coming out of this little area here. Just had a nice close on Friday. We're up a tiny bit on it. We're up 0.5%. But looks good, Doesn't have great earnings or sales. We've gone negative, but it is leading the market. We're starting to lose a little bit on the RS. We're down to 86, another little warning sign there. But there's really just not a lot of, call it merchandise. So this is kind of the best. And annual earnings are starting to really double up. So looks like whatever their royalty pipeline is starting to increase. That biotech, biomed industry group is 4 out of 197. So that's showing a lot of strength. And then we just added Merck. MRK is the ticker symbol. And here we're bought sort of out of this low part of this base, coming straight through back over the 50-day. We added just right over there. We just hasn't really made much of a move. We just got it on Friday, up just 0.25%. And then Vertex, we're actually up almost 5%. So that's actually doing probably the best of all of them. But we're starting to, at least they're all positive. We had a period there where they're all negative. Of course, we don't have a lot of open profit or anything, so we probably won't really add much of anything unless we can at least have some open profits that are kind of going to finance the next batch of stocks that we buy, or we actually sell one to actually lock in some profits. So, with 4 positions, that's what we're going to end up doing. And then the last one on our long-term outperformers is Humana, which finally made a nice move. This has just been floating around here doing nothing, and had a nice move, almost at all-time highs. So we're actually up now 3.7% on this one. So it's looking, they're all starting to look a little bit better. So that's why we were encouraged. We added those two half positions, I think, in Royalty Pharma and Merck. But this has happened before, and it just doesn't. A few days later, we're stopped out of all of them. So we're going to try to see if we can just we might sell a little bit of Vertex. We got a little bit more just to lock in some profits. Maybe move our stop up, and then we have what we call a free trade. So really, if it just comes all the way back, we end up just flat and not losing. So in this market, we're also just trying to improve our position, and if we can move our stops up and at least lock in profits, or get it to the point where if it does stop us out, we don't really lose anything. That's sort of the goal, and or just take shorter profits. So we'll see. We're not quite there. The best one we have, just not even up 5%. We're kind of not really at that level yet. But we'll be watching it, because that may be all we get. So here we have a few. This is the growth stock ready list. We've added some new names. T-Mobile being one of them, which is acting much better than their competition, Verizon and AT&T. Both of those stocks charts are looking pretty broken. It just broke out of this. It's got some volatility here, but on low volume. So we just have this in the buy zone, breaking out above this. Not the greatest situation, but really what we're doing, it broke out of this base. It had just a little bit of pullback for 2 days, and now we're coming back up, buying into this. But it's a little. I wouldn't give it 100% my favorite setup here, but that's what it is. Here we have Amdocs is the next one. DOX is the ticker. This one just came up. Finally it's acting a little bit better. You can see twice has gotten up into this buy zone, and the sellers just pushed it down. Finally, we've had a close above there. I think this is all-time highs, or yeah. So looking pretty good. Look at the monthly. Yeah, so this stock has come a long way over time. That was a 20-year chart. So it's looking pretty good. I mean, earnings didn't come in positive, but the market didn't seem to really mind it. It must have been some good guidance or something. Just solidly growing annual earnings. Not fantastic numbers, but again, this is just what we're given. This is not a stock I would say we would hold on for a long term, or even a big gain. If we can get 10, 15, or even 20% out of this, I'd probably just say goodbye to it, unless it's acting, really, really, really strong. But it's probably who knows? We'll see. The next two stocks in our ready list were just Merck and Royalty Pharma, which we've already seen. So let's look now at our long-term outperformer ready list, and we have a name we've seen before, Cadence Design Systems. Sold off during this whole bear market, and it's just come ripping right back up to highs. Now this we'd like to see a little bit more. We don't like it just comes up and just blasts off from there. Really didn't get a chance to sort of wean out any of these buyers here or weak holders. But we've just popped up into the buy zone. So let's go back and look at a monthly. So you can see this is why it's a long-term outperformer. Just a nice long run over time. And it's getting support at key moving averages for the most part. So we like that chart. In fact, let me go back for a second. Look at the RS too. It just continues to go higher, outperforming the market. So really, that's what we're always looking for. And there's just not a lot of these stocks. So it is in the buy zone. We've owned this in the past and done well with it. Really good numbers. Overall ranking of 98 out of 99. Growth rate 24%. Just this is it's a company in the right place. Earnings have been growing. Margins are strong. So this is one. I think because we already have a number of positions, we won't end up buying it for the portfolio, or maybe we'll do a half position or something, or a quarter position, just to have some. But we'll see. I mean, the market's overdue for a pullback. I'd say the Nasdaq's up over 11% from its 50-day. It would be healthy to have some kind of consolidation. We'll see how this acts during that. We've passed earnings too, so that looks pretty good. Let's now look onto the growth stock watch list. And the first one is Biomea Fusion, BMEA. This was acting pretty good. It's got a RS of 99. It's gotten a little bit volatile here. You can see, in fact, I think we owned this. Yeah, we did own this, and we got kicked out of it. So we're just continuing to watching. It's the buy zone is from 12.11 to 12.25. It's just right above this little area here. So we're just watching it. It's just acting a little. It's a little too volatile at this point. But the stock doesn't have any earnings. It's a lower price stock, so it's on the riskier side. So we're going to watch that. We do have next one is BJ Wholesale Club. Acting pretty well too. It's formed this double bottom. And again, we're getting just some volatility right around the buy zone, which is just that same thing we've been seeing over and over. Earnings are just in 5 days, so we have to be a little careful. We may just have to pass on it before then. But again, what's been happening with these stocks is they've been blasting off into earnings. And then it's like so sometimes we try to buy them before, and the ones we have just haven't done anything. The ones we didn't own take off into earnings, and then sometimes they sell off though. So we saw that with some of those other stocks. In fact, I can show you one here. A few more we didn't do. Here was another leader. We looked really good. Didn't like the earnings, plunged. Another one, Funko. Again, ran up into earnings and then just plunged and gave back all those gains on earnings, and it's been drifting lower. So you can see the volatility. This is what's been going on. And I think that is it. That's all the stocks we have. We just got rid of a few off the list. They're just not acting very well because of this exact kind of action that's been going on. Just very erratic trading, gaps up, and big moves down, then you close the high, and this has been why it's so difficult to be able to own anything. In fact, this is almost like a poster child. You can see here, every time stock would rally up, it would sell off. It was getting support at moving averages. Here it gapped up, couldn't hold it. You thought, okay, that's finally it. The stock's off. Then it gapped up, came back down. Couldn't even make a new high. It's just this is almost impossible to hold a stock like this. And the only way you'd make any money is you're just selling into these short day moves. So if you had bought it, not that there's any buy signal here, but if you had bought it here, you'd probably just get out right there, just out. And that would be the best move. If you had bought it there, a week later, out. Here, just same thing. And of course, if you had bought it over here, you only got a few days, and then out, and then you're done. So that's the market we're given. It will change eventually because it's been a long time since we've had a good trading environment. We're just trying to keep, our gains. That's part of we've been in a bear market, so we're just trying not to do anything dumb. We don't take big positions in this kind of environment. The market has not been telling us to do anything like that for a long time. So we're either doing small positions or getting out early, just trying to book some gains. And that's where we are. So we'll be back next week and looking at some more stocks, and maybe we'll have some better gains too. Also, just one final thing, kind of just looking back, we haven't really been holding any stocks for like more than like a week or so. Right there, it just tells you it's not an environment where you can really hold on. So again, that's why our overall, if we go back to over here, our overall environment's red and swing trading, and we just have very small exposure recommended because this is what the market's giving us. Okay, that's it for this week. I'll be back next week. Okay, thanks.